Hi everyone, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Portfolio Manager at McNichol & Associates Asset Management. Well, this has been a very, very interesting week. And so we're going to take a look at it in a bit of detail here. The first thing, of course, that happened is that the Standard & Poor's 500 has kind of cracked out over my 3150 line in the sand, and perhaps I should have been a little bit more precise, a little bit more imprecise is probably the better term, because typically when a stock comes up to one of our breakpoints, we usually have what we call a 3% 5-day rule. In other words, we have a little bit of slippage that happens at the breakpoints, and that's because we don't necessarily have all of the balance sheets in our system right up to the second. So that means that there's a little bit of imprecision, even though we are projecting the balance sheets as best we can from the expected earnings that are coming up. Anyway, Standard & Poor's may or may not have broken out over that level. As I said last week, listen, what we've got are the lowest interest rates in recorded history, and we have stock buybacks like you wouldn't believe, and we have a president who is desperate for re-election, and therefore a U.S. Federal Reserve Board that is doing its very, very best to make sure that we don't get a nasty bear market in the next 12 months, which would utterly and completely destroy Trump's chances of election, assuming that he's got any, which I sincerely hope he doesn't. Anyway, Linda, who I talked a little bit about last week, said, well, okay, what you said was really interesting, but I'd like to know a little bit more about how those breakpoints work. So what I thought that I would do would be to show you a chart, albeit it's going to be one of those really outlandish ones, but I'm going to show you a big chart, and we're going to talk about those breakpoints and how they work. And the stock that I'm going to look at is now called Bosch Health Companies. Used to be known as Valiant when it had this big run, and of course years and years and years ago, when it had the previous huge run up there, it was known as BioVale. Now, you look at this thing and you say, oh my goodness, that's an awfully busy chart. Look at all those lines. Oh, Ross, how can I possibly deal with this? Well, let's just kind of take this in bite-sized pieces before we tear out our hair, assuming those of us who have any hair can even tear it out, and take a look at Bosch in little bits and pieces. And the first thing that I want to focus on here is that when you look at the chart very carefully, you'll see that there are 5 heavily covered lines. Okay, there's the BB line. That's the first one here is the heavy purple line. That's the bubble price. And that occurs at 7.4 times price to book. The second key level is the super growth price. That's the SG price here, and that's 3.5 times book value. The third heavy line is the growth price. That's the red line. The fourth one is the green line. That's the end price, or the normal price, which is the book value, the adjusted book value of the company. And then down at the bottom, here we have the blue price. And the blue price separates those companies who are fundamentally okay from those companies that the market suspects probably have balance sheet issues. Now, there's a lot of little lines in between. I'm not going to talk about them right now, because in terms of the big picture for Bosch, it really doesn't make a hill of beans one way or the other. But I want to show you what happens when stocks get to one of these key breakpoint values, okay, of which I pointed out there are 5. Well, typically when a stock price approaches and crosses one of those breakpoint, major breakpoint values, it typically tends to indicate that the stock wants to move on to the next breakpoint, the next major breakpoint. Okay, and you can see in the case of, I keep wanting to call it Valiant, but of course it's Bosch now. You can see here the stock broke out, and that's exactly what it did. It went right up to the super growth price, and then, with a lot of volatility, went plunging right back down again, almost to, and probably actually to, the growth price at the time. The problem is, in retrospect, of course, that we have all of the balance sheets in, whereas at the time, of course, the balance sheets were not in. It is quite likely that Valiant, aka Bosch, probably stopped right at its growth price on the way down. Anyway, it recovered from there, went up and broke out again, this time over the super growth price. And that in turn suggests that there may be enough growth oomph to get to the next major breakpoint, and of course that is the bubble price. Well, it got there, and indeed it got there and had quite a sharp setback there, but hit it again and broke out again, and this time it went up another 2 breakpoints. We don't know when it goes into the bubble zone just how far that a stock valuation can go. However, what I will tell you is that when a stock breaks out over one of those breakpoints, okay, the distance between all of the breakpoints in what we call the bubble zone, that is those prices above the bubble price, it's 36% between each of the breakpoints, 36%. So that when you get a buy signal through one of those, one on the bubble price in one of those charts maybe that you're looking at, the gain that you're looking at is not trivial. It's quite substantial. And here in this particular case, of course, Bosch went up 2 breakpoints, so it went up well over 70%. Anyway, that was on the growth phase going up. So you can see it sort of hitting a major breakpoint, going to the next, hitting it, going to the next, and now we face the downside. Well, the upside here, okay, I mean, look at that's kind of like an escalator, isn't it? You can see the stairs, but they're slowly moving up, and look at February 09 until the 15th. That took quite a long time to get there. Now, the stock moved from 14 to, look at that, 347. So that was some escalator ride. And now, however, we've got to get back to the main floor. And of course, we're not going to ride the escalator. We're going to take the elevator because it's faster. And that's very much the case in the stock market. The getting up is the hard part. The getting down is the easy part. It's just that you want to avoid that. So anyway, Bosch, aka Valiant, aka BioVale, got itself into some real regulatory issues on drug pricing and phantom pharmacies and all kinds of things. And the stock fell to its bubble price, here you can see right there, and then a little bit below. And when it fell below, you had better run, not walk, with your pink ticket and sell, because when you catch that elevator, it can go down awfully fast. How fast? Well, this stock moved from its bubble price down to the next major breakpoint, its super growth price, and it moved there in very, very fast order. By the way, that is a loss of more than 50%. That is a brutal first step down. This, by the way, is very, very common with what I would call busted growth stocks. They'll be up here in the bubble zone growing like crazy, but when they come down, they'll come down fast. But typically a growth stock which hasn't lost its cachet, but it's in the wrong kind of market, it'll typically stop and bounce very nicely at its super growth price. And so, by the way, did Bosch. It nipped a little bit below, but it was a kind of a 2-day wonder, just on a kind of an overshoot, and it had a beautiful, beautiful bounce there. In fact, an almost 2 breakpoint bounce, which, by the way, would mean that the stock was up something in the order of about 55 to 60%. So that is no trivial rebound. You can bet your boots that anybody who rode that particular rebound thought to themselves, thank goodness. Okay, the growth story is back on again. Well, sorry kids, no, it isn't. The stock moved down there and then it cracked through the super growth price, and when it goes through the super growth price, you can almost inevitably expect it's going to drop to its growth price. So from the super growth to the growth, well, that's a loss of about pretty close to 60% right there. And that's exactly what it did, except that here you see this sort of gap. Well, that's when we had that nasty report by Citron Research, and the company also was accused by Congress and brought up before them, and the stock just plummeted. In fact, it plummeted. It didn't even stop, I think, to blink when it got to the growth price. It just plunged, and it went right down to the next major breakpoint, its normal price. That's its book value. Well, once down to book value, you're going to say, that's pretty cheap. Particularly, see, look what's happening to the fair market value. Now, the fair market value is coming off, which you can see in the dotted line, but it is certainly high and very, very, very much above the book value of the company. So there was still a lot of positive feelings that maybe something was good was going to happen here. And indeed, look at that, a beautiful 2 breakpoint bounce, back again to the bottom, another 2 breakpoint bounce, down again. Oh, this time it fails. And of course, when it fails at its normal price, you can expect a blue price. And that's exactly what happened. We had a double bounce here at its blue price. And by that time, we had pretty much discounted the absolute worst. And subsequent to that time, there has been a lovely rebound in the company. In fact, today, you can see that there is some 89% upside potential. The company has recently broken out over one of our minor breakpoints here at its mid-growth price, and looks as if it is heading even higher. Anyway, I want you to keep that very much in mind, because we're going to be kind of revisiting this story, if you like, this narrative, when we look at Netflix. Okay, on to the FANGs. Well, what am I going to say about Amazon that I haven't said and said and said and said? Absolutely nothing. The stock, here's a 6-month chart. The stock's been moving absolutely dead sideways. Who cares what the market has been doing? Hitting new highs. No, I'm sorry, that's not Amazon. Those are yesterday's mashed potatoes, and we'll have to make them into potato latkes or something today. But Amazon isn't doing anything right now. Facebook. Well, remember we've been talking about Facebook, and Facebook had been sort of trading on either side of its MSG price. That's 5.5 times book value. Never sort of quite getting away from it, but always been kind of pull back and then under again, and then pull back again on the side, and then riding the MSG price now for some period of time, and now it's broken back down below it again. And of course, when we look at the fair market value, we see that it's about 19% below the current price. So that the stock is not exactly supported strongly by its fundamentals. It's going to be interesting to see whether it sort of gets back on site again once again. But again, this is a company that personally I would not choose to hold in my portfolio. Alphabet, well, I've said this many times before. Alphabet gets up to its low super growth price. That's 4.5 times book value. I know that I have showed you the very long-term, the 10-year history of the company. The LSG price has been it for almost all of that 10-year period, say one little period when they just temporarily broke out, but unless we have a real rip-roaring market, it's really hard to see that this company can do any better than that. And furthermore, when I look at the implied return on equity of the company, it's running about 16-17%. I mean, that's nice. It's a nice return, but it doesn't call for a price to book of 50 times or anything like that. And indeed, it simply will not give it to you. Now, Netflix. Well, here's this company. It's been struggling on either side of its HB3. And that's about 16 times its book value. And look at that. It was below, popped above, fell below, back over again. It actually stayed there for quite a number of days there. And very, very recently fell right down precisely. I'm going to show you the exact chart. There we are. Precisely to its HB3, and has now had a little bounce from that $292 mark roughly to the current about $298. It's hard with all of the streaming competition to see this company taking off and becoming a growth stock, a fast-growing stock again. And now I want to go back and sort of reference my Bosch Valiant chart, and let's take a look at Netflix from a much longer point of view. Now, I hope that you're getting some sort of feel for it, but again, I'm going to give you a kind of a gross overview. So here was the first crash of this. Actually, it wasn't the first crash; it was the second crash in the company. And when this company crashes, I mean, good grief! Look how fast this thing comes down. That was about $32 there at the and look where it landed up. It bottomed at the super growth price. This is such a common phenomenon in SVA that you almost welcome bear markets, because you know that some of these lovely growth companies are going to get hit unmercifully, and you know where they're going to stop. And it stopped right at its super growth price. Thank you very much. Well, it recovered back, hit its bubble price, and then let's take a look at the subsequent action. So the stock went up 1, 2 breakpoints. Remember, each breakpoint is 36%. 1 breakpoint, 2 breakpoints, 3 breakpoints. Okay, so now we're talking well over 100%. And then it had a 1 breakpoint setback, bounced up, and then 2. So up 3, down 2. From there we had, look at there, a 1 breakpoint, 2 breakpoint, 3 breakpoints, sideways, 1 setback, 2 setbacks. And then 1, 2, 3, okay, and we had another 3-step up. Now, of course, after 3 steps up, we should expect 2 steps down, and that's what we've had. We had a 1 step down, and now a 2-step down. And then the stock bounced there, as one would expect after a 2 breakpoint bounce. But look, this time the stock has refused to go any further. And we've now had a 1 breakpoint, 2 breakpoint retracement here. And the question is, can the stock hang on at its HB3, or are we now going to have a reversal of this pattern? Because if we are, then the next step down is to the HP2, and that's $227. So I would be very, very careful of Netflix, because $288 to $227, that's painful. Okay, on to Apple. Well, there's Apple. Apple is a kind of an overachiever. I'm going to be interested to see what's going to happen here. I understand that the sales in China are way off, and that Huawei is mopping up the floor with them in terms of building up market share. So we will be curious to see what happens here, because the stock is now well above its fair market value. And of course, as I showed you in that 10-year chart that I have showed you frequently, the fair market value has tended to be about it for the company. NVIDIA, well, all I can say about NVIDIA is missed it. Who knew that the Bitcoin was going to come roaring back, and everybody would get all excited and run about and shout and want to get the NVIDIA chips again so they could chase Bitcoins all over again. But apparently they are. Of course, you know the longer-term chart of NVIDIA. And it looks like it wants to head a lot lower before things are all over. But of course, now you know what to expect. If this company were to pull back, for instance, at some point to its bubble price, and it ever went through, now you know what can happen. Finally, Microsoft. Not really a FANG, but we've been following this stock for some period of time. And we've been really interested in what happens to this company when it gets to its HB1. That's roughly 10 times its book value. Well, the last time it got to its HB1, it had a big setback. In fact, it went from its HB1 to its bubble price. That was quite a nasty fall. But now it's roared up here again, and this time, well, of course, it hit there and set back, just as we would expect. But it's been now sort of banging at the door and banging at the door. And very, very recently, maybe, you see on a very, very close and personal chart here, the 3-month chart, you can see the stock actually trying to break out. Well, unfortunately, it's not doing it with what I would call a great deal of authority. And but it's struggling. It's struggling to hold, and I would guess that if 1% interest rates and the Federal Reserve going mad, and Donald Trump seeking election at any cost, if that's enough to hold the stock market up over our fair market value, which of course has been the peak of the stock for 35 years. So if this is able to hold and something brand new happens, well, then you probably would be interested in owning Microsoft. It is actually well above by about 40% its fair market value. However, when markets go insane, well, you just have to ride along with them. Anyway, to learn more about our service, I would, well, you know, a couple of things. You can go to our website and download the first 3 chapters of my book, Inside the Stock Market, you know, but I would also welcome you calling me up. And let's have a chat about how we can do something for you. Because, look, we're at that time of market when there are some profoundly overvalued companies, and you have seen from a couple of examples that I've shown you just how fast those values can fall. And if you have one of those kinds of stocks in your portfolio, frankly, I think you will find the cost of our service very cheap compared to the risks to your capital that you may be running. Anyway, this has been Ross Healy, the chairman of Strategic Analysis Corporation, and a portfolio manager at McNichol & Associates, reminding you that nothing, including investing, as I hope you've seen today, is difficult if you have the right tools. I'll see you next Friday. Have a good week.